Hello and welcome to Market Forward, your go-to show where we aim to get you all the highlights of the trading action that took place today, and of course the important data points that you need to know to gear up for tomorrow. I'm Surabhi Upadhyay. As always, with me is Nigel D'Souza, and what a way to start the week. Down and out this Monday, thanks to some global cues.
Well, that's right, but Surabhi, the problem was that the Nifty tried to pull back intraday, but that got sold into. So that was a bit of a worry. If you want to look at a bright spot, you'll say 22,500 at least held out. And you didn't see panic selling towards the end of trade. Remember, this week as well as the expiry, it's a truncated week as well. So we'll expect volatility to pick up in the next couple of sessions as well. Let's run through a few data points with regard to today's trade. It was a weak session for the bulls. Indian markets ended lower. The problem was IT stocks. They underperformed in trade, particularly mid-cap IT came in for a bit of a smashing. While the Nifty Bank, West, it ended lower. But if you pull up an intraday chart, you'll see that the Nifty Bank actually from the lows of the day did gain close to around 400 points or thereabouts. That was a bit of a fight back that we saw from banking names, driven by some of those large private sector banks. The advanced decline ratio, well, it ended firmly in favor of the number of stocks that were declining, but at least you had 650, 700 stocks that were advancing during today's trading session. At the highest would be there were 850 stocks that were advancing. So no doubt the structure is punctured, but there are select stocks where you did see some kind of buying, and that gives you some heart.
Absolutely, some hope. But it's the market, like, as they say, how much can you flog a dead horse?
Yeah.
And that's what played out today, because we've already fallen so much.
Yeah.
And today we sort of, punched through a lot of the important support levels as well. But since this market is down 15% now, down on the Nifty level from the peak, and almost 18% down, if you're looking at some of the other broader indices as well, 18 to 20% on the mid-cap index. So what played out was a bear grip that started with Wall Street. Wall Street was weak, not just on Thursday, but Friday was a big sell-off day. And that today translated across Asian markets. So we were not alone in the fall. Even the Chinese market fell today. The Japanese market was shut. But we fell more than most other Asian and European markets. So that's the bad part. Now, talking about the support levels, that support came and went in a blink at 9:15 itself. The zone of 22,700 to 720, it was holding all through last week. Today, we just kind of flashed past it, and there was never any attempt at a meaningful recovery because, it's extremely weak out there, and no one's running into now buy the market immediately. In terms of sectors as well, it was pretty all-encompassing. Mid-caps were weak, but even in overall sectoral indices, if you look at it, metals were down, banks were down, IT was down. So there was hardly any place where you could really run and hide. Some buying coming through in FMCG and pharma, and we'll talk about that as we go forward. So weak start to the week. So what's the lineup on the show like? Well, let's tell you. Of course, all the movers and shakers of the day and more details of today's downfall with the Hormas coming up in just a second. Then we put the spotlight on IT stocks. A lot of the large cap IT names like Infosys, L&T Tech, TCS, Tech Mahindra, most of them were down. So we'll talk about it. There's some buzz around PE firms getting into the healthcare space, which is why a lot of the healthcare stocks were actually outperforming. Plus, they're seen as a safe haven. So we'll talk about that. And M&M finally had a little bit of a relief move today, 1.5% up after a big cut. Last but not the least, once we're done with all these stocks, we'll of course get you all the important cues to track tomorrow. But first, let's take a look at what fell today, a down Monday to begin the week. Hormas, over to you.
Forgettable days, and that streak continues. It's been a while since we said it was a day to remember. But, of course, it was led by IT names. And when the NASDAQ sneezes, Indian IT catches a cold as well. And you could see that on the screen in today's session. Almost every stock, barring Coforge, was in the red, down almost 3.5 to 5% in today's trading session. Be it LTTS, Wipro, even Infosys and TCS were down close to 3%. The other pocket of pressure today were the metal names. And here, even there was not even a single gainer in the index. Or SAIL, Vedanta, NMDC, all of them ending, most of them ending at the lows of the day, anywhere between 2.5 to 4.5%. There were newsmakers today, mostly on the deal-making front. EPL ending 9% lower, the biggest fall in 5 years after the stake sale announcement. Healthcare Global, the confirmation of a CNBC TV18 news break. Vaccine makers continue to do well. Pfizer was one such case in point. Garden Reach telling us earlier in the day the order book likely to reach 40,000 crore by the end of next year. And of course, Zomato on the Nifty inclusion, but ending at the lows today. What also ended at a 52-week low were enough and more number of names in the broader markets, be it Sera. CIE Automotive continues to fall after after its results. Latent View, Fine Organics, Wellspun also having a forgettable day at the office. But there were some pockets of green. Pharma was one such pocket, and some of the other names including GSK Pharma ending at the highs of the day. Also ending at the highs today were Data Patterns, Varun Beverages, Happiest Minds. So some pockets having some strength, but predominantly a day of red.
Thanks a lot for that, Hormuz. Well, let's welcome our guest on the show. We get in Anand Tandon, who will help us out with the fundamentals, and Jay Thakkar from ICICI Securities will help us out with the technicals. Jay, markets are, breaking the lows on a day-to-day basis. Today, we ended at around 22,550. We have expired in the next couple of trading sessions. What do you think? Is the pullback on the cards, or do you think, this market's headed lower? No point trying to buy the index at any level.
Good afternoon to you, Nigel and Surbhi. Well, see, the data of Nigel is negative. I mean, if you look at the derivatives data or the technical data, then we have been seeing low tops, low bottom technically. In fact, this is the second close below 22,800 levels. In fact, today is the decisive close below it. Last trading session, it was just 5 points below 22,800, wherein Nifty was going below those levels, but managing to close above those levels. So this is the second day we have seen a close below 22,800 technically. From derivatives perspective, what we are saying is that, the call writers are getting aggressive at each level now. The range is getting shifted at the lower levels. Earlier it was 23,300, now it's shifted to 23,000. So according to me, until we are not seeing Nifty surpassing this range of 22,800 to 23,000 on the upside, the data suggests that, the call writers would have an upper hand, that is the bears would have an upper hand. It's just that on an immediate basis now 22,500, where we are seeing some put base will act as a support. Futures is about 22,600, still not looking at the spot. And this is the expiry week. So I think that at least until the expiry, the bears will continue to have an upper hand. If at all we have to see a good reversal coming in the market, then it is most likely to happen post the February series. Probably from the start of the March series, we might see some relief coming into the market. The only thing, Nigel, which is not giving me the comfort is the IVs. The fall in IVs, I mean, it's still at 12, and the markets have been struggling to bounce back. If at all there is a push or a bounce back in the IVs itself from say 12 to the average of 15 to 16, then it would create a further pressure into the market. So the IVs are not giving me the comfort, which are clearly indicating that the downtrend might just continue.
Okay, so not much great news in terms of perhaps finding a bottom as of now. Got it. Well, let's move on to the sector of the day, and that has to be IT. A lot of the stocks were under a lot of pressure, between 2 and 4% down. Large cap names, there was selling in mid cap IT as well. Well, coincidentally, today was also the big NASSCOM event, and CNBC TV 18 did catch up with a lot of the IT titans on the sidelines of the NASSCOM Technology and Leadership Forum 2025. Infosys' CEO Salil Parekh believes that the industry is ready to face the challenge of AI disruption. HCL Tech CEO and Managing Director C. Vijay Kumar claims that a large part of the industry is still driven by the input-based model, and that needs to change. Meanwhile, L&T Tech Services MD and CEO Amit Chadha expects FY26 to be a better year for the company and the industry. Take a look.
The view that we see is there's a huge shift in technology. So whether you look at generative AI or you look at quantum, or there are several other technologies in motion today which will impact where the world goes. What I mean by a view of the future that we are seeing is when there's huge technology change, we within Infosys, I think we broadly within the Indian IT sector are ready to face that challenge. A lot of reskilling today, at least within Infosys, over 270,000 people more ready for AI. So that's the first element. Second, in terms of new roles, we've already shared this last quarter. For the next financial year, starting April, we will recruit something like 15 to 20,000 new campus hires.
What we saw in the last 30 years, a fairly linear scaling of IT services, which scaled with people and revenue scaled very linearly. I think the time is already out for that model. And today, in fact, just not today, in the last couple of years, we've been challenging our teams on how you can deliver twice the revenue with half the people. We need to dramatically change from input-based to more output and outcome-based. A lot of services that we deliver, operational services, from people-based, it needs to become platform-based. Whatever growth that we are seeing in the business should not make us complacent, because the underlying themes are not the same as cloud and digitization and other things. This is very different. The changes that AI is ushering in is very different, and we need to be more proactive to even cannibalize our revenues to create completely new businesses. Having said that, I remain quite optimistic of how we can reinvent.
I do believe that CY25 and FY26 will be a better year than FY organically than FY24. Yes. 5 and CY24.
Well, interesting commentary coming on the sidelines of that particular event. Let's get in Anand. Anand, what's your view on tech? Till I think towards the end of 2024, a lot of people thought tech was the place to hide. Now, all of a sudden, you have this threat from AI. You have the NASDAQ that's pulled back as well. And some of these tech names suddenly are very, very nervous. What's your preference in the tech space?
So if you are looking at pure IT services, I think it's dead. There is no need to mince words. No matter what the CEOs tell you, coding for AI's engine's ability to code is increasingly becoming more and more sophisticated. You will not need even 1/3 the number of programmers you have today, even two years from now. Now, most other companies in India have no imagination. The billions of dollars have been created, of wealth have been created globally with new companies coming up with products and services which are different from just having manpower into dollar per head. Unfortunately, in our case, the leaders in our industry have been unable to see beyond dollars into number of people. And as a consequence, we remain a midget of an industry in terms of the quality of output we are producing. So for most industry leaders today, you should expect to see them wallow and do nothing for the next many years till they kind of shrink and die, unless they are able to move into something dramatically different and are able to reinvent themselves, which will be a fairly painful process, and we don't see signs of it yet. So overall, I think Indian IT services sector as a whole is under serious threat. It is only those companies which have products or services which are tuned to certain specific areas of design and things like that, which will have a reason to actually exist. General IT services, I don't think one should be looking at investing anymore.
Okay, well, the numbers definitely not working in their favor. Anemic growth, single-digit growth is what most of them have clocked in the last 1 or 2 years. Anyway, let's quickly move on to another interesting sector and an important deal. Global investment firm KKR is all set to acquire healthcare provider Healthcare Global by buying 54% stake from CVC. Vinny is here to give us the contours of the deal. Vinny.
So we're seeing that KKR, the PE firm, has actually acquired controlling stake in Healthcare Global for around $400 million. They'll be acquiring 54% stake. Now, this they'll be acquiring from CVC Asia's affiliate, that is ASO, which is holding around 60.35% stake in the company currently. Now, obviously, this is going to be at a purchase price of 445 rupees is what they're going to be buying this stake from CVC Capital, KKR. And this is at a discount of 12%. Now, because it's at a discount of 12%, we are expecting that the stock could open up in the red today. And also do not forget that Healthcare Global in the last 6 months has seen a run up of around 26% in terms of an up move in terms of stock price. CVC Capital's affiliate will continue to hold 7 to 9% stake in the company post the stake sale. There's going to be an open offer of 26% as well, where KKR will be acquiring some part from the public shareholders as well. And overall, this is expected to be completed in the third quarter of 2025. So keep an eye on that one. And the current founder and promoter of the company, Dr. B.S. Ajay Kumar, will now become the non-executive chairman of the company. So key to watch out for how Healthcare Global actually moves into it today.
As unfortunately as the cancer cases are increasing, or we are able to identify more cases, it is becoming one of the issues. 1 in 9 may have cancer as we move forward. That itself requires a focused factory approach in the era of precision medicine. And HCG is known for precision medicine with research and academics. With all of that, it makes a lot of sense for for us to come together with a company PE, like a global PE like KKR, which has expertise in healthcare. So together we can develop this into, much more growth can happen in HCG. And we see this as a growth opportunity for both of us.
Okay, that's HCG, but that wasn't the only deal in the market today. The next one is with respect to EPL. Now, Indorama, which is a global packaging firm, is all set to acquire a minority stake of 24.9% in EPL from private equity firm Blackstone. This deal will be for a total consideration of 1,907 crore rupees, where we have Upasna with us to give us more details. Lots of pressure on the stock because of this, Upasna.
Certainly. Well, stocks saw a very sharp fall today after the promoter announced a stake sale. Now, Blackstone has entered into a definitive agreement with Indorama Netherlands to sell a minority stake in EPL Limited. Now, Indorama Netherlands will acquire a minority stake of nearly about 25% of EPL from Blackstone at a purchase price of 240 per share, taking the total consideration to nearly about 900 crores. The sale is expected to be completed in the coming months, subject to regulatory approvals, is what the company has highlighted. Now, Indorama will become a minority shareholder in EPL post this transaction, and Epsilon Bitco Pte, that is a fund backed by Blackstone, currently holds nearly about 51.45% of the stake in EPL as of the December quarter. Hence, this stock remained in focus today on the back of the promoter stake sale, 26% off its 52 weeks high.
Okay, all right. Thanks a lot for that, Upasna. Anand, any view on either of these names? EPL actually ended at the low point of the day. And you want to revise your view with regard to HCG? Is it a re-rating or it's done enough?
Well, as I mentioned, that the hospital should actually do well in terms of growth for the near term, but whether or not the quality of services will remain is a question. Because if you look at the history of what private equity has done to healthcare in the US, it is dismal and it is quite debilitating in terms of what they end up doing. But, we have to wait and watch how that happens in India. On EPL, I haven't looked at the numbers of late. It has, so I can't really comment, but I was just scanning it as you were speaking. And in the last 5 years, the growth rate has been 6% on the top line, 4% on the bottom line. Not something that will make it very exciting for now.
Okay, all right. Thanks for that, Anand. Well, let's get some stock-specific action going. Shares of Mahindra & Mahindra, well, they pulled back post-brokerage firms had written that they're quite positive on the stock after the recent underperformance. Nimesh joins us to fill us in with some details on that. Nimesh?
The stock is on 14% in the last 10 days, has massively underperformed the Nifty and the auto peers as well. And on Friday, there was massive delivery-based selling and some fresh shorting as well. There are two major concerns the street is highlighting. One, the Tesla entry. And two, a lot of analysts said that the EV bookings was lower than their estimates of 30,000 units. So these were the two major concerns. But there are multiple brokerages of written on M&M today. I'll start with Goldman Sachs first. They have a buy rating, target price of 3,800. They believe that Tesla's potential entry is driving 15% discount to M&M's auto business versus the peers. And they've put out very interestingly that in the last 10 years, M&M has returned a medium of 23% and 36% returns over 12 months and 24 months after the 15% kind of falls from the recent peaks, and there's been 5 such instances. So now they believe that can replicate again in M&M. So that's Goldman Sachs' view. Bernstein has put out a note as well. They believe that the current correction is a buying opportunity on dips, and they feel that the valuations are now quite appealing from an investment point of view. M&M has adhered to its capital allocation policy, which is good. And Tesla's entry could be having a very long-term impact, not very in the near term. That's Bernstein's view. Even Jefferies has put out a note. They have a buy rating, target price of 4,075, the highest probably on the street. And they believe that the valuations at 20 times core business on FY27 is quite attractive, and hence they retain a buy on M&M.
Okay, thanks a lot for that, Nimesh. Well, let's get on to the latest with regard to Bharti Airtel. The board has approved an increase in shareholding in Airtel Africa by 5%. This will take place in one or more tranches before the end of this fiscal. Remember, Bharti currently holds around 57.29% stake in Airtel Africa, and this transaction at the current price would entail around a $320 million of cash outgo from Bharti Airtel. The reason that the stock was nervous in today's trading session is the street fears is, will it have any kind of impact on the dividend distribution policy? So what they would have liked, in fact, is instead of going ahead and increasing stake from 57% stake in the Airtel arm, that's the Africa arm, they rather would have given out dividends. So for the time being, it's okay that they're increasing it, but the street would have in fact liked that the dividend distribution would rather been increased. Well, on that note, though, we'll have to thank Anand as well as Jay for joining in and helping us out with their call on a whole host of stocks. For the time being, we slip into a short break, come back, key corporate voices and events to watch on the other side. Welcome back. You're tuned into Markets Forward. First up, let's tell you all the top corporate voices that we had during the course of the day. KEI Industries management tells us that demand has been robust and they're aiming for 1,000 crore net profit in the next few years. They also say that they're guiding for revenues of close to around 13,400 crores by FY27. They've added that exports will increase from around 11-12% to around 18-20% in FY27, further aiding margin expansion.
Okay, next up, we have Metropolis from the healthcare space. The management expects to end FY25 with 12% growth. Margins could see some dilution in FY26 as they are looking at some acquisitions in the next 2 to 3 quarters. And last but not the least, we have Garden Reach Shipbuilders. The management has told us that a substantial influx of orders is likely to take place in the near term. The order book can grow from 25,000 to 40,000 crore rupees in the next 1 year. The company is also aiming to maintain a 5-year revenue CAGR of 25%. The management further added that a target of 8% PAT margin is expected to be maintained.
Okay, before we wrap up though, let's get you some key market events you need to track. Upasana Bhatt is joining us to help us out with all of those events. Upasana, take it away.
Well, it looks like quite an eventful day tomorrow. First up, let me start with the global economic cues. US will be reporting its consumer confidence data for the month of Feb. Europe, Germany Q4 GDP data will be out on a Y-on-Y basis. Now, let us look at the key stocks that will be in focus today on the back of corporate action. SBI Cards will also be in focus tomorrow as the stock goes ex-dividend. Results, important results for Q3 FY25. SpiceJet and Rain Industries will be on focus on back of this. Equinox India will also be in focus as the company will hold a board meeting to consider fundraising tomorrow. And lastly, Tata Steel investor meeting is also scheduled to be held tomorrow. Last but not the least, let's not forget Apple annual share meeting is scheduled for tomorrow at 9:30 p.m. IST. So these are the key events that we'll be closely watching out for tomorrow.
All right, Upasana, thank you very much for that. And with that, it's curtains on this edition of Markets Forward. Thank you very much for watching. We'll come back with more news and updates in just a bit.
much.